Hello, friends, and welcome back to the Complete Tech Heads podcast with me, Tom Edwards. And today we are talking cryptocurrency, a super interesting subject that I have not had the chance to cover yet. So very, very excited to meet this week's guest, who is Jack Jia, the head of Unlimit Crypto. Jack's been working in the crypto space for the last 10 years. He was the first employee at Wyre, a first-generation fiat on-ramp that helped wallet users to onboard fiat into crypto. He also had a stint at Consensys, leading go-to-market for Metamask Institution and as head of BD for Infura. He now returns to payments as the head of crypto at an established payment company in Unlimit.com. So we'll hear all about Unlimit.com a little bit later. But first of all, hello, Jack. How are you doing?
Great. Yeah, thanks for having me, Tom.
If you are interested in extending your own healthy lifespan, then I can't recommend this week's partners enough. DoNotAge.org is a company dedicated to helping people like you and me extend their health span through supplementation. On the website, you can check out all of the different supplements that they sell, accompanied by a whole section on the science behind them. You can read the links on where they've got their research from, check out the team that's working on it, and of course, pick up those all-important supplements for yourself. So go to the site and use the code CTH for a 10% discount. You can also find the link in the description for this show. Great to have you on, and super excited to talk all things crypto. As you know, I want to talk to you about the Bitcoin ETF, but before I do, I'd love to get just a bit of a background to you. Like, how did you find yourself working in the crypto space, and like what kind of attracted you to the exciting world of cryptocurrencies?
Yeah, thanks. I think I was part of the crowd that kind of got incepted at one of these Thanksgiving dinners, right? And the Thanksgiving dinner happened to be in 2013, right? 2013, was, pretty early, I guess, at the height of the bull run at the time. And, I was just talking to like a private equity fund manager that was from Hong Kong. He was telling me about this Bitcoin thing. I had studied economics, political economics at UC Berkeley a couple of years before that. So, it was something that was kind of intuitive to me because, we had the 2008 financial crisis where a lot of companies went bankrupt, but the government spent money and printed money in order to buy these valueless assets. And it didn't really make sense to me. It's like, oh, so, General Motors is currently bankrupt, but you're printing money to buy this valueless asset. What's going on here? I didn't quite understand. So, Bitcoin made a lot of sense from, I think people come in from different angles, right? It's like if you're a developer and you look at Bitcoin, what's going to make sense to you about it is going to be more the technology side as far as, oh, this is like an internet native money. It uses consensus models and encryption to maintain this network. And it has some kind of crypto economic incentives for why you should be a miner and why, people use this, right? So you might look at it from more of like a technology angle. I looked at it from more of this political economic angle that, oh, well, this is a stateless money, right? Where it separates, state from church or state from money. And this is something that from a game theory standpoint can really take off if certain countries start adopting it. So, at the time I was doing like another startup in like AI and machine learning for like hydraulic equipments. We were trying to apply different machine learning to hydraulic equipment so it can kind of self-diagnose. The technology wasn't ready at the time. AI nowadays is here, but this was back in like 2010, 2011. So I was doing that in terms of this like AI hydraulic smart pump startup when I found out about Bitcoin. And I just read it during holidays, read it for like a month. And I was like, yo, this is going to be the future, right? So in December 2013, I found a startup in Silicon Valley that was out of these incubators called Boost VC with Adam Draper and Tim Draper. And Tim Draper has, the Midas touch, one of these billionaire VC guys in the Valley. Anyways, this VC had funded a small startup, a Bitcoin startup called Snapcard that later became Wyre. And I went there to become the first employee and never looked back. Yeah.
Wow. Amazing. It's interesting that inflection moment was around printing money because like I often kind of think that at its most basic level, like crypto is almost just a reaction to inflation, right? And just because inflation is just a function of governments printing money, it's almost like you could almost boil it down to that kind of simple level in some ways, right?
Absolutely, right. I mean, in the first Genesis block of Bitcoin itself, the very first transaction, it was minted on there. It was inscribed on there as far as, Chancellor on the brink of second bailout, right? And that was in reference to the UK and what the central
Yeah.
banks were doing there. Not as much as what the US was doing, but look, this happens at a global scale in terms of the fiat monetary system. So, like this, Bitcoin was very much a reaction to, kind of modern Keynesian economics, right? But also
Mm.
just from like a technology standpoint, it actually works and it's been working, right? It's a mutable ledger that has been very stable. The first couple of years, there was a couple of times where Bitcoin kind of went offline, right? Which any technology in the very beginning, you're going to have that type of tech issue. But honestly, like Bitcoin has been very resilient, and it's one of those things where even nowadays the market itself has said, okay, you're here, you're going to be here, and we need to play ball. So, and hence the Bitcoin ETF from TradFi. You know?
Right. So, perfect segue. You should be a podcast host. So, on the Bitcoin ETF, then. So, as I kind of explained previously offline, this isn't a crypto show. So, I would love to get an introduction to exactly what, well, the Bitcoin ETF is, but a broad top line on what ETFs are generally, and then what exactly they're doing with the Bitcoin ETF. What exactly is it? And like, why is it important?
Yeah. So I mean, ETFs in general are these like exchange traded funds where there's an underlying asset, whether it's gold or some kind of stock like Apple, or a bundle of stocks, right? Or in this case, this digital commodity like Bitcoin, right? There's a custodian. In this case, 7 out of 10. So there's 10 issuers right now. There's 10 issuers, all the top traditional financial firms, right? Like not Blackstone or BlackRock yet, but you have like Fidelity or Van Eck, right? Not Vanguard yet, but anyways, you got like these top traditional financial firms that have issued this Bitcoin ETF, which is basically like a wrapper asset that can be traded against classic financial rails, right? And then there's like underlying custodian. In this case, 7 out of 10 of the issuers are using Coinbase custody, right? There's a couple using like Gemini custody as well. And Gemini is, the Gemini's, the Winklevoss, and Gemini.com is also a crypto exchange, like Coinbase.com is. Anyways, Coinbase has a
Just to
custody.
jump in there, just jump in. So when you say custody, you mean that Coinbase essentially owns the Bitcoins that are then being traded against?
Well, they're providing the technology for you to hold the crypto against your own kind of multi-party computation wallets, right? So there's like a transaction policy engine where you, as a kind of fund manager, in this case, Fidelity or Van Eck, they get
Mm.
to manage the accounts on behalf of their users or the ETF buyers, right? And they are segregated accounts where they are pooled accounts. It really depends, right? But the underlying technology is just a crypto wallet that is secured through multi-party computation.
Right. Okay. And so essentially what it means is at a basic level, it's bringing Bitcoin into the traditional financial rails so that traditional institutions can then talk in the same language as Bitcoin. Or
Yeah,
Bitcoin will
exactly.
talk in their language, which is the language of money that's gone back for hundreds of years.
Well, so if you take a step back and you think about how traditional finance works, it's like you got a bunch of exchanges like Nasdaq, right? You got a bunch of brokerages
Mm.
like Robinhood or like Revolut, or these digital brokerages where you can where the brokers directly deal with end users that buy and sell, right? So usually people are buying and selling stocks like Tesla or Apple on these platforms, and this is the TradFi kind of structure, right? Superstructure that is TradFi, right? Bitcoin exists completely outside of that, right? It's its own network. It has its own technology on how to custody it. It has its own settlement and clearance and transfer mechanism. So how do kind of fit this square peg into a round hole and mix this oil with this water? Well, you wrap it with this ETF so that it becomes this financial instrument that's fully regulated. And in fact, I can go into my like Robinhood account right now and I can see all the Bitcoin ETFs. So I don't have to actually own a Bitcoin wallet. I don't have to download and this kind of hierarchically deterministic wallet where I have 12-word seed phrase using BIP32 to hold my own keys, right? I don't have to do anything like that. I just have a Robinhood account and I can buy Bitcoin technically, right?
And so when you do that, again, I'll head it up now. There'll be lots of like dumb questions, but when you do that, what exactly are you buying? You're buying a share in the ETF. You're not actually buying Bitcoin, right?
That's right. That's correct. Yeah, and the shares can be spliced up differently. It can represent, zero point zero zero 0.001 BTC or zero point zero 0.01 BTC. It could represent, whatever. But it's a share in this ETF with a claim to the underlying Bitcoin, where you can buy and sell the ETF and thereby gain kind of this proxy exposure to the price and volatility of Bitcoin.
Right. And how, because Bitcoin is inherently deflationary, right? You can't print more Bitcoin. There's a finite amount of Bitcoin that's ever going to exist. I think I'm right in saying. How do these ETFs affect that? Because presumably you're now creating lots more shares in a Bitcoin asset. Does it then have any impact on that kind of fundamental selling point of Bitcoin?
Yeah, and that's the kind of bull case, right? That's the bull case for Bitcoin. It's like, okay, well, now you have made this crypto asset available through traditional finance, and any fund manager, any sovereign wealth, any nation, basically any kind of these insurance company with insurance policies that invest in different asset classes, all of these different money, like $40 trillion of wealth, can now suddenly access Bitcoin, at least in the US, right? I mean, there's already ETFs and ETPs in other countries. And there's also the difference between spot ETF and future ETF. But point being that, $40 trillion can now easily buy Bitcoin without thinking about custody and technology and security. And they can, in the long run, at least, this is the bull case for Bitcoin to shoot up to $1 million or beyond, right? And some people predict this to happen within this next year or two. I'm a bit more conservative on that front. I think, we'll probably top out at 300K or something, but who knows? The world is going really crazy. You're going from COVID 2020 to Ukraine 2022 to Israel 2023. Who knows what's going to happen next, right? And Bitcoin is disinflationary, meaning that the money supply increases at a decreasing rate, and there's only a finite amount. It's not like gold, right? Gold will probably inflate at a 3 to 5% inflation rate for the foreseeable future. There's not like a true supply cap on gold, because you can always mine more gold, and nobody knows how much gold is really on Earth. So you're gonna have this inflationary currency, but it's hard money. Bitcoin is even harder than that, right?
So, yeah, I think that's what people struggle with, and that's what I often struggle with, because I feel like it's almost a natural, like, human psychological instinct that gold, you could pick up a bit of gold, and I know it's probably seems silly to someone who spent 10 years working in crypto, but I feel like there's some psychological link there where gold, because you can pick up a bar of gold and you can say this is worth this much, it feels more real to a lot of people than Bitcoin, because they don't understand what it is that makes it harder than gold, right?
Well, I think this next generation is going to understand it much more intuitively, but because they grew up in the internet age. It's like, for us, it's like you wouldn't say that TikTok is not real, and it's very much real, even though it's in a digital form. It's like these elections were manipulated through social media, and that's a very real impact in the world, right? And but the difference between kind of information versus money is, if I send you a picture, I have a copy of that picture. I made a copy of the picture and I sent it to you. So you now have a copy of the same picture as I do, right? You can't do that with money, right? If I send you $100 and I still have $100, I have effectively counterfeited it, right? So Bitcoin solved this double spend on the internet, making an internet native money where you can send stuff around and there always is only the 21 million, right? And there's, probably like 19 million in supply right now, in circulating supply, but it makes it as hard as gold. It has the same attributes as money in digital form, right? And if you think about money too, it's like, well, what is kind of like Web 1 money, right? Web 1 money is like, cash in your bank account, let's say, or you have to go to a physical
Yeah.
branch to withdraw cash. Like, what's Web2 money? Web2 money is like, Revolut or Cash App, right? You wouldn't say that your $100 in your Cash App or Revolut isn't real, isn't hard money. It's $100, right? And that's this kind of internet Web2 money that is available through your digital banking, your neobank, right? So now you have this Web3 money that is on this kind of internet native protocol that exists, through this consensus model online on chain, and it has the same attributes as money, but it just exists outside of the government issued money system.
Yeah. 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 Well, I mean, so this is another thing I wanted to ask you about. Is like, so I know there's talk about CBDCs, central bank digital currencies, for those who don't know. And with the Bitcoin ETF as well, you're kind of bringing cryptocurrency into almost the traditional world of finance, and with CBDCs into the traditional world of government. Does it not like take cryptocurrency from being this kind of countercultural thing that sits outside of governments, and that's one of the most appealing things about it, is that it can't be manipulated by the government, and it can't be inflated just because they want to bail out a car company in Detroit or whatever. It's its own thing, it's its own revolution. Does not bringing it under the scrutiny of the financial markets proper and under the scrutiny of governments and central banks kind of just make it like, take it away from being this amazing revolution to just being like an upgrade on, like dollar V2 or whatever? Like, does it not kind of take away some of what was most special about it?
Yeah, absolutely, right. I think, and this is kind of the dystopic future of one path that can unfold, right? If you look back to what happened with like Napster and LimeWire like 20 years ago, right, in terms of music and piracy and privacy, and now you have this kind of a little bit darker of a presence, right, in terms of all these internet companies that have taken over, where you are the product because they run ads and they make billions of dollars from running ads to you, and the internet kind of morph into this dystopic present state, right? Whereas before it was really more about freedom and freedom of speech, right? And so the last thing you want is for crypto to become the Napster of Web3, right? You don't want
Yeah.
Bitcoin, to kind of you don't want Bitcoin to just stay on the fringe. I think it made a lot of sense in the very beginning for it to stay on the fringe because that was the concentration of liquidity, where there was a product market fit for users at the time. It's like, oh, we can use this on the Silk Road and buy whatever we want. The government can
Yeah.
tell us,
Right. Yeah.
oh, I can use this thing. No one can stop me to pay for something, even if it is illicit, right? But for it to come into mainstream, there are kind of two paths, right? Either Bitcoin and Ethereum and Solana stays permissionless, and it is allowed to persist throughout time, so that there's more open internet with open money, or you might get this kind of central bank digital currency where wealth can be wiped out from top down, in a centralized manner, right? And you can make Bitcoin illegal, right? And even these ETFs can be a way to confiscate Bitcoin, because if everybody buys the ETF instead of some Bitcoin themselves, then it's kind of like back in the days when they started confiscating gold, right? They made it a law where you cannot own gold by yourself, and they were confiscating gold. So you look to history, and it's like, okay, the government might do that at some point. And even just the ETF being launched itself is kind of shady, because if you look at what happened in the past couple of years, it's like, oh, so you mean that the entire crypto space just imploded with like BlockFi and Celsius and Voyager and FTX and all of these firms, these big companies inside the crypto space, they were doing hundreds of billions of dollars of trading volume, making billions of dollars in revenue. You mean that they all just died, and traditional finance is coming in? Like Nasdaq has a digital asset arm, so you're telling me that Nasdaq wants to replace Binance and Coinbase, and you're telling me that Fidelity wants to replace self custody, right? So that's these qualified
Yeah.
custodians can come in and traditional finance can take over, just like how the government helped the big tech to come into place, right? And we know that the big tech colludes with the governments, and that's why everybody hates where all the government people, they don't like Elon and X, right? They don't like TikTok. It's not, they don't like TikTok not because of this Chinese government firewall situation, or the fact that they can steal data. They don't like it because TikTok is stealing users and money from Google and Instagram and all these domestic internet companies, right? So there's definitely like a
Right.
protectionism against without, and that's where like the game theory becomes really interesting in terms of like West versus East versus this digital currency. You got like euro dollar versus ruble RMB versus Bitcoin and crypto, right? And the game theory on how the three unfolds is very interesting.
Yeah. Yeah. Can you expand on that, on how that might
Well,
unfold?
Well, okay. So I mean, you have U.S. hegemony for the past 80 years since 45, let's say, right? 1945, after we won World War II, and it's been this kind of unipolar world where the U.S. dollar has been dominant, the petrodollar. All countries are forced to settle oil futures in the U.S. dollar, right? Arguably, Saddam Hussein was taken out because he wanted to settle oil futures in euro back in 2001, got taken out 2003, right? All these wars we can see, with pipelines being blown up and whatever, is kind of obvious to the layman that probably the U.S. is behind it, right? So you have this U.S. hegemony where they're not necessarily trying to win; they just want to prevent you from, like when you're first place, all you have to do is stay first place, right? So they
Right.
just kind of
Yeah.
have
Yeah.
to sabotage everyone else, whether it's destabilizing a region, whether it's invoking a war between China and Taiwan, right? So there's a strategic interest for the U.S. to kind of topple governments around the world, whether it's in LATAM or Europe even, or Middle East or Asia, right? So that they can stay number one. But then you have these other countries that are waking up to that, like the BRICS countries, like Brazil, Russia, India, China, South Africa. All these Saudi Arabia is joining, and all these different countries are starting to, you know, do payments and settlements outside of the U.S. dollar and euro, right? They're starting to, use the
Mm.
Chinese yuan to do settlements. So, because if China trades with Argentina, they might as well settle with their own currency instead of buying another currency in the USD, right? Same thing with like if China settles with Saudi Arabia, well, why should we do it through the U.S. dollar? Why don't we just do it with RMB or some other currency that is native to ourselves, to our own country?
Yeah. Is there not some reason why is there not some, sorry to jump in, but is there not some, like, because I've heard conversations about this before, and I'm not an economist, but is there not is it not the case that China probably wouldn't be able to become the global reserve currency because it would mean relinquishing a degree of control over their own currency that they're unlikely to want to do?
Well, yeah, I mean, I think they're kind of trying to achieve the best of both worlds, where they are
Right.
retaining control and using the internationalization of the Chinese yuan as a way to, to challenge the U.S. And their hegemony. Right? I don't think it'll be the Chinese yuan, but it'll be a basket of currencies.
Right.
With Chinese yuan in there, Brazilian real. All these countries are buying gold, right? These BRICS countries, and they might have like a gold-backed currency. And together this basket of currencies can challenge the US dollar, right? And then you have Bitcoin in there as all these fiat currency systems and governments are starting to experience hyperinflation, right? Many countries
Mm.
have already. It's not just LATAM anymore. It's like the US is running out of cards to play, right? This year is going to be really interesting. They spent so much money or time last year increasing interest rates to fight inflation, and inflation is now down, but the cost of capital is so high that businesses are on the brink of bankruptcy. And if they do go bankrupt, you're going to have to print more money like 2008 in order to buy up those valueless assets to prop the economy, which is going to cause inflation again. So, and if inflation will lead to $1 million Bitcoin, even without the Bitcoin ETF, right? So,
Right.
there's an interesting dynamic in the world for
Yeah.
sure.
So because the yeah, look, and I think it really is, like, I think you're the conversation around de-dollarization globally is certainly prevalent, and I mean, I don't really have a strong opinion on whether the dollar will remain the primary global currency forever. It's probably beyond my pay grade, but it's certainly an interesting conversation. One point to pick up on the question about inflation and how Bitcoin is, it was kind of billed as being a hedge against inflation before this last inflation. And then as inflation went up, Bitcoin price seemed to go down. So it was almost like the opposite happened. Have you got any feelings on why that is?
Well, so, in 2020, after the whole COVID situation and governments printed trillions of dollars overnight,
Yeah.
Bitcoin did go up when inflation went up then, right? That's when we hit the all-time high, 69,000. But then in 2022, the government started fighting inflation by increasing interest rates, and that's kind of brought prices down, right? So the price of Bitcoin. But now we have strong fundamentals. So once again, like I don't think the government has any other cards to play beyond, like if the economy crashes again, they have no other cards to play than to decrease the cost of capital by decreasing interest rates and printing more money. So you do have, there's a lot of correlations in this, but I mean, point being that I think all in all, we're going into this kind of inflationary period in terms of long run, right? It's not gonna like it's gonna take time, right? It's kind of ebbs and flows as we kind of go up,
Yeah.
69K, 20, break to 120K, 200K, and then come down to maybe 80, right? And so, you want to look at the halving, right? Like 2013, 2017, 2021,
Yeah.
2025, 2029,
Yeah.
and you're gonna have this kind of all the way up. Yeah.
So we should probably just explain that, because I know what you're referring to, but listeners might not all. So the halvening that people refer to it as, right? The halving. Could you explain what it is that you mean by that?
Well, so the Bitcoin network is mathematically designed in a way where the code base, it basically decreases the amount of Bitcoin that is mined every 4 years. So every 10 minutes, there's a new block being produced. That's why it's called a blockchain. It's a chain of blocks, right? And every block has certain kind of bits or bytes in size of how many transactions you can put in it. There's a fee market against that as well. On if you have like a million transactions that tries to fit and only 1,000 transactions can fit, you're gonna kind of bid it up, and add an extra fee, in order to fit your transaction into that particular block. But anyways, the Bitcoin blockchain is designed in a way where a block is produced every 10 minutes, right? And certain amount of blocks, basically roughly every 4 years, and the next one's coming up in a couple of months in like May 2024. So every 4 years, uh, the amount of newly rewarded Bitcoin to the miners, it gets shrunk by half, right? So we've already gone through a couple of cycles where Bitcoin went from 50 Bitcoin down to 25 Bitcoin every 10 minutes, right? New Bitcoin being minted and introduced into the money supply, right? To 12.5 Bitcoins, to 6.25 Bitcoins, to now 3.125 Bitcoin. So that's why I said at first, it's not a deflationary currency, it's a disinflationary currency, right? The money
Right.
supply
Yeah.
increases at a decreasing rate, right? Which means that there's a supply crunch, right? The supply crunch is going to cause a supply shock because you have all this ETF pouring in with new money trying to buy Bitcoin,
Yeah.
but the amount of Bitcoin supply is getting shrunk, right? So the first bull run, it coincides with the halving, right? When the amount of Bitcoin is rewarded every 10 minutes cut by half, it just so happened that there was a bull run 2013. When that happened again 2017, that's when we went from like $200 to $20,000, and then 2021 as well, right? This is without regard for the rest of the world as far as what's happening in terms of monetary policy of the governments, or COVID or wars, right?
Yeah.
This is just the Bitcoin network itself is designed in such a way that there is this mining reward that's given out every 10 minutes, and that it halves every 4 years, so that there's less Bitcoin being rewarded. And that seems to have a lot of effect on the price, as to why the supply shock causes supply crunch that causes Bitcoin to have these bull runs every 4 years.
Yeah. And so, do you think then that those cycles, the fluctuation in the price of Bitcoin is essentially unrelated to geopolitics and government intervention? Like, what do you think that the Bitcoin's own cycle of bull runs, halving, all of that stuff is is far more closely correlated to the Bitcoin price than geopolitics and government intervention? How would you kind of rate those if you've got these two things, Bitcoin's own kind of levers and external levers pushing the price around? Which is
Well,
most important?
yeah, I mean, look, it is a multivariate equation, right? And this is where the universe has kind of worked out, where it's kind of both, right? It's very
Yeah.
serendipitously both. Like the whole Bitcoin ETF was launched on January 10th, right? Which was like exactly 14 years ago, where Hal Finney wrote running Bitcoin on Twitter. It's just like the perfect day. The universe just kind of aligned where, the macro from without launched the ETF on this day where one of the original founders of Bitcoin was running Bitcoin, right? So
Yeah.
I think
Yeah.
it's both, but definitely Bitcoin has its own economics, right? And that economics is built into the code, and so the market watches that, right? And so the way that the market prices Bitcoin is based on the fundamentals of Bitcoin, and everybody understanding very transparently when the halving happens, right? You look to like the past 13 years of Bitcoin, and you look at like 6 months before the halving and 6 months after the halving, what happens with the price? Because market actors, they're watching, the price, they're watching these
Mm.
events, major events. Yeah, so it's a little bit of both.
And I guess that is a that is something that the cryptocurrency in general, but Bitcoin in particular, certainly has in its favor, over fiat currencies, is that it is, its movement is predictable. Like, you never know when the Fed or the Bank of England, I mean, they give some indicators about what they're planning on doing and how much money they're planning on printing, or or when they're planning on tightening the supply. But it's very much kind of, just driven by the whims of a select few human beings who are, as we all are, fallible and liable to make poor judgment calls at times. So I guess that is one very concrete thing that you can say about cryptocurrency, is that it won't have that kind of human whim element in its fundamentals.
Yeah, it's in the code, right? It's like Ethereum. Like we talked about Bitcoin a lot, but every blockchain is transparent and permissionless and open. So whether you're an
Mm.
investor or whether you're a developer, you're able to rely on this technology in an immutable manner where you know that it's just going to work. You have this kind of proof of work mechanism with miners supporting Bitcoin, but you have this proof of stake mechanism with validators supporting Ethereum, right? And Ethereum also has its own thesis on why there will be an Ether ETF, right? And because Ether, through the proof of stake model, actually rewards stakers instead of miners. There are no miners, right? There are validators, and the validators are regular people that are holding Ethereum, and they can stake it to support the
Mm.
security of the Ethereum network. And there's like a 3 to 5, 7% interest that's being paid out. Almost like if you buy like Coca-Cola or
Yeah.
Clorox or some other company that gives you dividends. It's like Ether gives dividends, right? That makes a
Yeah.
lot of sense for traditional financial players, where it's like, okay, cool, yes, Bitcoin makes sense. It's an inflation hedge. It's going to go to $1 million, but Ether also makes sense. We can make 5% just from holding it, and so that's also going to come on the scene. As far as the interplay between kind of this socio-political versus the deep tech and technology, it's really coming together when you look at crypto. Yeah.
Yeah. Yeah. When you're staking Ethereum, like, what are you getting? Because a traditional dividend from a company, you're basically getting a share of the money that this company has made by selling goods and services, right? It's pretty straightforward. What is it that you're actually getting paid for when you stake your ETH?
Well, so it's the same thing as Bitcoin and Ether in terms of the intent and the function of mining versus staking, which is to maintain the security of the network by validating transactions to include them into the next block in the blockchain, right?
Right.
And the only difference is the proof of work is like you're solving some really hard math equation that requires all these hardware computers to do so. And that work, when you convert basically energy into money by spending the energy on the mining equipment in order to be rewarded by the network with newly minted Bitcoin, right? It's the same thing for Ethereum, except instead of proof of work, you have proof of stake, where you stake a certain amount and then you go and validate transactions. And if you so lie and say, well, this transaction didn't happen, and everyone else says no, this transaction did happen, then you will be slashed and you will lose your stake, right? So you stake some, and then you continue to validate transactions. As long as you don't lie, then you're helping the ledger to stay as a source of truth that's reliable, right?
Yeah.
So all
Yeah.
it is just maintaining the security of the network that allows transactions to happen every second, every 30 seconds, every 10 seconds, every 10 minutes, whatever it is. Every blockchain has a different consensus mechanism on finality and settlements, and how long it takes before a transaction is confirmed on the network, right? And you think about how that works currently in traditional payment networks like a Visa or like a faster payments, right? You have a central bank that basically does settlements with all of the banks for faster payments, right? Or Visa is like you have this Visa network that is tapped into Bank A and Bank B that moves money between a card holder and a merchant, right? These are all networks that are closed loop. They're all centralized. They're all private networks, or they're private payment networks. You can think of blockchains as almost like public payment networks in a way. Yeah.
And so I get all that, but like just to just quickly loop back to the question, like where is that money? Not money, but where is that interest coming from? So are you getting a bit of the next block that you've helped to validate? Like when
Yeah.
you get your 5% or whatever.
Right. So just like how at first we were talking about the Bitcoin halving, and there's newly minted Bitcoin where the code base of Bitcoin itself, as far as how the network is run, that's how it runs. Is it mints new Bitcoin and gives it to the miners, right? Same thing with Ethereum. It's also mints new Ether to give it to the validators, right?
Right. Okay. Right. I'm with you. So so it just gets split between all of the different people that have staked their ETH, and that's the only place that the new ETH goes is to all of the people that have staked.
That's correct.
Yeah. Okay. I'm with you. Right.
It's
Yeah.
almost like
Sorry.
really.
I feel really stupid now. It's like, oh yeah, obviously, but yeah. Sorry.
But there's a lot
Okay.
of
Yeah. I'm with
ambiguity,
you.
right? Because like you have like the U.S. mints or like the U.K. mints, and the government is minting money and they're printing money,
Yeah.
right?
Yeah.
But
Yeah.
then here it's like, okay, well, who's printing money? Well, the network is, and the network is run
Yeah.
by
Yeah. Yeah.
the social consensus amongst us to run the same code base, that we all play by the same rules, and it's a decentralized way of minting money or digital money. Yeah.
I mean, you can see why people get so like invested in crypto. So I've got friends who like every time I see them, they're wearing like a Bitcoin t-shirt, or like they're so into it. And I can see why now. I mean, just talking to you, you kind of think, oh yeah, it is. You just are literally reframing your entire idea of what value exchange is. Like we're so rooted in pounds and dollars that it is kind of you have to shift the way that you think about value fundamentally, I think.
Absolutely. And I'll give you like a short anecdote. I've been in the market to buy a car, and I'm like, why would I spend 40K on this when that's one Bitcoin right now? When in a couple of years, this is probably worth zero point 0.1 Bitcoin, 0.1 Bitcoin, right? I rather
Right.
buy a 2001 Lexus RS for a couple of $1,000s and just drive a beater around because it gets me around from A to B. It serves its function. Now I'm living more frugally, making better economic decisions, right? When you have this inflationary currency where you know that the value of your money is going to be worth less in the future, you have a propensity to spend it now today, right? But when you
Yeah.
know your money is going to be worth later on, it incentivizes you to save and make better economic decisions for you and your family, right? So this actually has the social element where it causes people to be more fiscally responsible, and awakens them up to be less reliant on the government and more reliant on their ability to produce value and exchange it for this monetary value, right? You're exchanging your
Yeah,
time and
yeah,
energy for money, and you spend it more wisely instead of just going out and buying, BS, right? Yeah.
yeah. Well, I mean, and that's why governments target. So they say that they're trying to fight inflation, but actually governments want an amount of they target 1 to 2% inflation as what they're shooting for, right? Like they want inflation because they want people to spend, because they want people's cash to be worth less than it was 10 years ago, so that the wheels of the economy keep turning, I guess,
Yeah.
and so that they can tax every single transaction that happens throughout that journey, right? How much of the Bitcoin ETF conversation, and how much of the decision from the authorities to allow it is to do with taxation, do you think?
Oh, it's a lot. I mean, look, I mean, not to get too conspiratorial, but I kind of alluded to it at first. It's like, all of these crypto companies just so happen to die. And I'm not saying there wasn't fraud there with like Sam Bankman-Fried, or just poor risk management and poor operational management. There sure is.
Mm,
But, when someone is at the edge of a cliff, it takes a little bit of a push to really kick them off. So I think there's an
right.
incentive for Wall Street and Washington, D.C. to collude, to come in and take over this particular industry and regulate it, right? They'll do it under the guise of consumer protection, right? Which is fair and true, because when you have all these unregulated exchanges that are offshore, they can rug pull you. It's like, oh, the founders disappeared. Oh, they had a
Mm,
100,000 Bitcoin. They were trading on the exchange, and now it's dead. So there's definitely a strong argument to be made as to why governments should step in and regulate this industry, and to remove bad actors, and to let the traditional players have a role, because they have had relatively much better risk management. That's an argument, right? You can say that, HSBC laundered money for the cartel, or
yeah, yeah,
way more money laundering happens through the traditional banking system than it does on Bitcoin, or and Bitcoin's actually, or crypto is actually more easily tractable because it's an open ledger, and you can like fight financial crimes a lot easier. But point being that I think either way, the government is stepping in and regulating it. And in a way, this is a good thing, because with regulatory clarity, it gives all the industry actors a clear path on what to do, right? It's like
mm,
when you're dealing with a country that hasn't come out with clear regulation yet, you don't know what to do, right? And you don't know how to stay compliant so that you don't get in trouble, right? But at the same time, it's like if they over-regulate it, then it can be at best annoying, right? Like your cookies, accept your cookie, GDPR and stuff. At best, it could be annoying, and at worst, it could slow the technology down, right? This is another side we haven't talked about yet, which is the technological inevitability that is blockchain technology, right? I don't know if you use like,
inevitability,
yeah. Well, I mean,
inevitability. Yeah, yeah.
yeah, it's
Okay.
inevitable. I mean, it's just like the internet, right? It's like if you look at
Yeah,
the
yeah,
90s or 80s, people didn't think that you were gonna like start sending emails instead of faxes. But it's like, who sends faxes today? I don't have a fax machine. I have to go to like FedEx office in order to use a fax. I don't know how to use a
yeah.
fax, right? And in the same way, it's like as we move from Web 2 to Web 3, the underlying technology stack is shifting. There's a seismic shift where you're moving away from these centralized systems to these decentralized systems, and that is kind of inevitable right now. Which blockchain wins?
Mm,
That's another question, right? If you use Solana, you know things happen pretty fast on there at a very cost-effective rate, that can potentially challenge Ethereum. Because whenever you do a transaction on Ethereum, it might cost you $5 to $15, sometimes $50, $150. If you do a transaction on Solana, no matter how complex the transaction is, no matter how much computation power that transaction requires, it's less than 1 cent and less than 5 seconds, right? So
yeah.
that can operate at scale, and if it does, then it can help tier one Web 2 companies to imagine like a game, imagine like an Xbox game, imagine like a Call of Duty, right? And all of your items on there, you can be almost like Ready Player One, where all of your in-game items can kind of transpire across gaming platforms, right? That's something that
Mm.
can disrupt gaming, right? We talked about finance already in terms of how these Bitcoin ETF or Ether ETF is disrupting traditional finance, right? You have culture, you see NFT, right? NFTs are has disrupted cultural value, right? Imagine if like Da
Yeah.
Vinci, imagine if Da Vinci came out with like Da Vinci coin like 500 years ago, how much would that be worth? And the cultural value of
Yeah.
art, right? It's you
What?
can
So
token.
what? So just to stop you very briefly, just you mentioned NFTs. What happened there? Because they've kind of just seemed to have disappeared from public consciousness entirely. I mean, the last thing I saw about NFTs was how some NFT that was worth millions and millions is now worth not very much, and that seems to be the kind of prevailing public mood. Like, is it still, is OpenSea still around? Like, are people still paying big money for
Yeah.
NFTs? Is it just a cultural fad?
Well, look, every asset, whether it's Bitcoin or NFT, right? They go through cycles, right? Bitcoin
Mm.
dropped from like $20,000 down to 3,000, or it went in the first run. It went from 1,200 down to like 180, right? Like you're gonna draw down 80-90% because it's a very volatile new tech, and people don't know how to value these things yet. So NFT just had a run in 2021, 2022, and yes, it has basically temporarily died, right? But the technology is here, and it's something where people are starting to understand that we are in a meme culture, right? We're in a
Yeah.
meme culture. You can say that Bitcoin itself is a meme coin, right? So you got like things like Bunk, or like Obama Shinu, or whatever Dogecoin, and all these different meme coins. Like, well, what is the value of this? Well, the value of it is everybody finds value in it, right? Everybody finds value. The value could just be, oh, it's
Mm.
fun, it's funny, right? But there's value. There's a cultural value in that. There's social consensus that we're pumping this particular meme instead of that. How do memes become popular, right? And what is the value of that meme, right? It's a way for
Yeah.
society to communicate, and for society, for people to kind of keep track of what we find important, right? So there's definitely like a fine line between something like a Bitcoin that's hard money and a meme coin versus something like an NFT that just has cultural value according to what people's demand for it is, right? But the technology is here and is useful not just in this kind of cultural art context, but NFTs could be used for a lot of other things as well. Yeah.
Mm. Yeah. It comes back again to that point about, you just kind of, I suppose, have to reframe what you think of as value, right? Like, if it's maybe the value is, as you say, it's just in it being funny, like Shiba Inu. What's valuable about it? Well, lots of people find the dog quite fun, like, and that is value in a sense. I suppose it is just about this switching frame from the physical into the kind of digital, which is why whenever you read about cryptocurrency in like the Financial Times or the Economist or whatever, they are almost always trying to frame it in a traditional financial way. And I suspect maybe it's a generational thing as well. Like, a lot of the people that write for the FT will be, or the Wall Street Journal or whatever, will be a bit older, maybe. But like, there was an FT piece that came out just the other day, and I noted down a quote from it, just because I knew I was talking to you basically, and I happened to be reading it. But they said, where's the quote? So the FT recently said, if cryptocurrencies are indeed currencies and not speculative collectible fads like baseball cards or beanie babies, then they would be the world's first traded currency with no economic purpose. So does that to you just scream of someone who just doesn't understand
Yeah,
cryptocurrency?
that's correct. It's too broad, right? It's too broad to generalize. It's like saying if internet is a way to only talk to each other, then this is the first internet that doesn't have any value beyond this digital communication format. It's like, well, it can be that, it can be something else, and you don't really know what
Yeah.
it can be until new innovation happens on top of it, right? It's like, so the same thing 25 years ago, where it's like it's kind of hard for people to imagine 25 years ago exactly how the internet is going to unfold over the next 25 years. In the same way, it's like, yeah, Bitcoin, roughly speaking, or crypto, roughly speaking, has this financial side to it and a non-financial side to it. Anyways, is a new technology that you can use for a number of things, for settling trades and different asset types. You can tokenize securities. The CEO of Blackstone is and BlackRock are talking about tokenization a lot, where even securities can become a token. In the same way that the ETF is kind of a wrapper of the underlying assets, right? You can do the inverse, where it's like, well, we'll keep the stock and then we'll issue a on-chain security token and we'll trade on the
Yeah.
blockchain instead of in traditional finance. So, like
Yeah.
it could be anything and everything, right? It's this new internet native money on top of which uh, money can be used for, cross-border payments or remittance. It could be used for FX trading or settlements. It can be used for, kind of this assets trading clearance and transfer agents that replaces traditional finance. It could be used for cultural value exchange, such as baseball cards and Pokemon cards. It could be in-game items. It could be anything and everything, but
Yeah.
it's not one thing, right? So,
Yeah. Yeah.
yeah.
I guess it's also interesting that they use this, collectible fads like baseball cards. It's like, well, to some people, baseball cards are really valuable, right? Like you have baseball cards from 50 years ago that are worth millions now, right? So it's almost like they've used this example to disparage the idea of lasting value by raising an example of something that isn't money that maintains value over a long time. It's almost like making the argument, making the opposite argument to
Yeah.
what he thinks it is.
Exactly. It's like you can tokenize everything, right? You can put a 1965, Ford Mustang GT and tokenize that as NFT, and you can sell that NFT as a claim to the underlying asset, which is that 1965 Ford Mustang, and
Mm.
replace that word Ford Mustang with diamonds or gold or baseball cards or any physical items, right? There's a company called 4K, just 4K.com, and that's what they do.
Uh-huh.
They take physical assets and then they tokenize it as an NFT. And now you can trade the NFT on the blockchain. You can burn the NFT to claim the underlying assets. And it's a more efficient way for that particular subculture or for that particular community to trade amongst each other that can
Yeah.
give some incremental efficiency to that particular subculture, right? So
Yeah.
this is, at the end of the day, Bitcoin and crypto are many things, but there's a technology side to it that does make things more efficient in terms of the transfer of value.
Mm. Yeah. Have you heard about those people? This is a bit of a tangent, but those people who there's an island somewhere and their money is like these giant rocks and they're too big to move, right? So they don't carry them around with them. They just trade this. So they're just like there's Tom's rock somewhere and that's my rock, and there's Jack's rock somewhere and that's your rock. I'll see if I can find it. I'll see if I can find who they're called. Um,
I'm just grabbing my laptop charger that is dying.
yeah, no worries. I don't know if I'm going to find them. Well, maybe someone in the comments when this goes live will know what I'm talking about. Or maybe they're wheels. Maybe they're like big wheels. All right. Oh yeah, here we are. It's the here we go. Right, yeah. So they are the Micronesian island of Yap has a famously unusual currency. Hundreds of giant
Yeah,
discs of rocks scattered all over the island, many of them too heavy to move. I'll here. I think I can. I think I can share my screen for viewers. 2 seconds, because there's pictures of these rocks here. Uh, Can you see this article that I've got? The tiny island with human-sized money, and this is their currency. These gigantic rocks. Have you ever heard about these people?
Absolutely. Yeah, there's actually a crypto company called Yap that
Oh wow, amazing, amazing.
yeah, it's this is one of the classic examples that Bitcoiners like to use, right? In
Right.
terms of the kind of the history of money, when you look at things like yaps or seashells or gold and all of these different things on what constitutes money. This is why it doesn't matter whether it's digital or not. What matters is the fact that the attributes money are contained and embedded in this digital currency.
Yeah, yeah. Awesome. All right. Well, look, I don't know how you're doing for time, but it's just a couple of things. I was going to ask you about altcoins, just generally, and then I want to learn a bit about Unlimit and what you're doing there. So, are you good for another 10, 15, something like that?
Yeah, absolutely. Yeah.
Awesome. Yeah. So first of all, then altcoins. So we've talked a lot about Bitcoin. We've talked a lot about ETH. There are obviously, and we've touched on a few others. But there is obviously this massive, wild ecosystem, some of which are memes like Shiba Inu, others of which seem to have a little bit more credibility, like Cardano is one that I'm aware of. Like, how do you go about assessing who's serious and who isn't in this world?
Well,
And do
so
you even
let's
need to know who's serious and who isn't? I guess.
yeah, for sure. So I would say that for people that don't understand this stuff, the first thing you want to do is to distinguish between a token and a blockchain, because every blockchain has its own native token. So like Bitcoin has BTC, Ethereum has ETH, right? Solana has Sol, right? Polygon has Matic, and so these are all different blockchains, which is the network itself, on top of which you can issue a token. So it has its own native token for that network, and then it has hundreds of thousands of other tokens that you can issue, that you can use the protocol to issue, right? So right there, that should tell you something, because if you really want to buy one of the tokens on top of a blockchain, you can. But maybe if you don't know what you're doing, you should just buy the underlying native token of that blockchain
Right.
itself. So
Yeah.
I mean, I personally only hold Bitcoin, Ethereum, and Solana, because I don't have time as a builder operator. I don't have time to go and try to chase the next coin, right? If you're a daytime
Right.
trader, if it also depends on your risk appetite and your personality, right? Some people they love catching knives. They're trading and they're making leverage bets, and they make $20,000 a day because they looked at this 5-minute window frame where prices moved 2% and they made 20% from that, or 200% from that. Like there's people that do that, right? There's a spectrum of like kind of gamblers and speculators and traders and investors. I'm more on the investor side, right?
Mm.
And honestly, it's like I had to learn the hard way that I am not a trader, right? I've gone
Right.
from like
Yeah, you and millions more, I'm sure.
so I've gone from like 300 bitcoins of what I had down to like 20, down to 10, down to like 5, and so like
Wow.
the two most important things to consider is like identifying who you are, whether you're a speculator or an investor. Because investors, if you bought Tesla in 2008, you wouldn't sell it ever, right? If you bought Amazon 2000, you
Mm.
wouldn't sell it ever. That's an investor, right? You have conviction in this thesis, and you're going to hold it for the next 10, 20 years, right?
Mm.
And if you're a trader, then you don't really care about what you're trading and what you're holding. You have no long-term conviction. You're just trading the market, right? So you
Mm.
want to identify your personality on like who you are. And then the second thing is like you really want to understand counterparty risk, right? So it's like you can either
Okay.
lose money by trading, or you can lose money by holding money in the wrong place. Like I lost most of my coins in the early years from trading, and then I lost most of my coins in latter years from holding it at the wrong place, right? So like I
Right.
held it at FTX or an FTX backed company at that I didn't know, or like I held it at Voyager or BlockFi, or I held it at all these companies that went into bankruptcy, and now
Mm.
even though I had exposure to this coin, it's gone because or I'll get back like 30 cents on the dollar because the company itself is bankrupt. I was watching this
Right.
random
Yeah.
story about this guy that was homeless in Oakland, California, that had like $3 million that he was holding with Lehman Brothers in 2008. He had houses, he had
Wow.
boats, he had a $3 million investment fund, his retirement fund held with Lehman Brothers, right? So
Wow.
who are you holding your money with, and is that safe? Right. And this is why self custody is
Yeah.
so important. Self custody is your only counterparty is technology and math. Right. It's like if quantum computing breaks all encryption, then you have bigger problems to worry about than your Bitcoin, security being compromised. Right. But there's no other counterparty beyond the technology itself if you're holding your own keys, basically, right?
Mm.
Whereas if you trust in a third party, even if it is like a BlackRock or a Fidelity or these TradFi firms, you ultimately have to understand that, hey, there is still some counterparty risk here, right? So I would say that those, like, even before looking at coins, understand those two principles. Don't think about what don't think about what chain or token to invest in. First understand who you are and who your counterparty is.
Mm. Okay. Yeah. And do you think quantum computing hacking Bitcoin or hacking cryptocurrency is a risk
Well, I mean, there's a window of a
or
gap where it
solving
can
it?
be. Yeah,
Yeah.
exactly, right. It depends on who solves it. It's like, well, if a bad actor solves it, if North Korea solves it, if Iran solves it, and they plan, like, leave the world behind type of global attack, like we're screwed, right? But
Mm.
if you have like somebody on the West or like a good actor that solves it, there could be a patch and an update, almost like
Mm.
Y2K, with the UTC timestamps like that, that there's a window of an attack vector where the software doesn't update to accommodate for this new type of encryption that is needed in order to secure the network that is quantum proof.
Mm.
But this is more like sci-fi than reality, I would say. Yeah.
Okay. Okay. Cool. All right. Well, look. Tell me about Unlimit. What are you doing over there? What's exciting about what you guys are doing?
Yeah, here at Unlimit, we are basically an established payment company that's been around for 15 years. We're principal members of Visa and MasterCard, JCB, UnionPay, MX Discover. We have a lot of access to the traditional payment networks, and we're just trying to connect that to the blockchain networks, right? So, like, I'm head of crypto here. We're a team of 500. We have e-money institution license, payment institution license all around the world. We're taking care of the regulatory stuff in order to maintain this payment stack and banking stack, on top of which now I'm responsible for building the crypto stack, right? And the key word here is network connectivity, right? So how do you connect Visa to Ethereum? How do you connect, you know, uh, a banking system like ACH or faster payments to Solana, right? The connectivity between
Yeah.
these private payment networks versus the public blockchain networks. That's what I'm doing. Roughly speaking, you can think of it as like fiat to crypto, right? But
Yeah.
I do put some emphasis on kind of our own go-to-market strategy, which is to go after like kind of self-custody wallets, because I personally believe in self-custody. So I don't really want to build tooling for traditional finance or even fintech in a way. I really want to build tooling for kind of decentralized finance and non-custodial wallets, because I really believe that that's consistent with the ethos and the ethics of our ecosystem, and that we should be
Okay.
helping to educate people onto the values and virtues of self custody. So, we're basically building payment tools for self custody wallets to allow their users or
Okay.
the world's users to onboard onto this truly crypto native ecosystem, so that you can go from fiat to crypto to a self custody wallet and then use a decentralized exchange instead of Nasdaq, or use like a decentralized lending protocol, instead of lending tree, right? So that
Yeah.
you got to transfer the value from the Web2 payment network to the Web3 blockchain network, and to directly access Web3, right? You don't need an intermediary. You don't need a Bitcoin ETF. You can just use Web3, right? You can
Right.
directly access Web3 by yourself in a self-sovereign manner, and take hold of your own non-financial assets as well as financial assets, right? So we're basically building payment tooling for Web3.
Mm. Yeah, I mean, it seems like there must be a hell of a lot of work to do, right? Like, because there's this really like exploding crypto universe, and it's like everything we've already been discussing, right? Like there are these two universes, and I suppose there are probably lots of companies like you guys that are trying to build these connections in between them, right? Like, I mean, I don't know if you're perhaps doing it more comprehensively than others, or maybe you've got different emphasis than others, but like I can imagine the surface area between these two worlds must be huge, right? And so there probably is quite a lot of opportunity for all sorts of different people to try and link up the wires in between, right?
Absolutely, right? It's like every bank and payment company is looking at this. And, we're talking about TradFi as far as Wall Street and these investment firms, right? Investment banks. But you have regular banks,
Yeah.
right? You have checking, saving, Bitcoin, right? And you have regular payment companies that does, card acceptance or bank transfers and crypto payments, right? So, TradFi or traditional finance has many subsectors, in terms of like investments and lending and payments and FX and banking and all these different tenets of finance. But we're more on the kind of payment and banking side, and there's definitely a lot of players. Stripe is building a very similar product to us. And a lot of payment companies. Visa is working directly with Circle on stablecoin settlements, right? That's huge. I mean, Visa is arguably the biggest payment company in the world.
Yeah.
Yeah,
Yeah. Exciting times. Well, look, that's all of the questions I've got for you today. But look, thanks so much for for everything today. I feel like it's been a really, really interesting and insightful introduction to the wild world of crypto and blockchain. So yeah, look, Jack, thanks so much for joining me. It's been great.
for sure. Thanks so much, Tom.